Assalamualaikum. My name is Nur Alifah Ilda binti Roslan. So we are from Group 3. So I will present about the part 1, which is the business transaction for January 2023 for the company QPS Training Sdn Berhad, which is on the first question or part 1, they are required to us provide the journal entry and also the ledger account, which is for the journal entry to the ledger account. So this is the questions and this is all the statement that the report was give. So we're moving on to the journal entry, which is following the first date, which is January 1. So basically the statement that has been given is QPI's trending Sdn Berhad started the month with 5,000 cash and 10,000 in inventory. So the cash will be as a debit, which is 5,000, and inventory will be as 10,000. So these two will involve with these two will involve and effect the owner equity, which is owner equity will be credit. So that when we total up, which is we get 15,000. And then we moving on to the January, the statement purchase additional inventory on credit from supplier worth 8,000. So inventory will be a debit 8,000 and account payable, which is credit 8,000, where the company need to pay the supplier. And then January 5, the sold goods worth 6,000 on credit to a customer with cost 3,500. So this will be in detail account receivable debit 6,000, and also sales revenue will be credit 6,000, and cost of goods sold will be at debit 3,500, and also inventory 3,500 at the credit side. So we're following the next date. So the process will be same. So when we need to put the details, so when we involve with rent, will be as a rent expenses, which is in the January 10, 1,200 will be as a debit, which is rent expenses, which is give to the company, and then cash will be as credit, where the company need to pay the rent by cash. And then this will be as a advertising expenses for the company, which is will be as a debit 500, and also cash for 500, where the company are credit their cash to pay the advertising campaign. And then also same January 18th, the statement is receive cash of 4,000 from the January 5 sales. So the cash will be as a debit, which is their sales, and then account receivable also be as a credit. And then for the last one, which is the ending of the month is January 28. The statement is paid supplier 4,000 for the January 3 inventory purchase. So this in detail will be as account payables, where the account payable will be credit 4,000 and inventory will be debit 4,000. So we're moving on to the ledger account, where from the journal we need to convert the journal to the ledger account, where we need to open one by one the account. So for the first one is cash account. So in the cash account, we need to balance the debit and credits. So first thing first, we need to see what the amount that big amount to make the total is same. So when we see that in the debit 5,000 for on equity and account receivable is 4,000, so the total will be 9,000. So at the credit side, we have rent expenses 1,200, and advertising expenses 500, and also office supply 500. So when we are total up the credit side, we just get 2,200. So how to make the debit and credit balance? You need to take the debit amount, which is 9,000, minus with 2,200. So we get the balance carry down, which is 6,800 at the credit side. So the amount debit and credit will be same. So same goes to inventory account. We can see that in the debit we have only equity account payable in the January 3rd, and then January 28 account payable. So when we total up 10,000, 8,000 plus 4,000, we get 22,000. So at the credit side, we just have 3,500. So the process will be same. We need to take the debit amount, total amount, to minus with 3,500. So we get the balance carry down is 18,500. So we're moving on to the next. So this is owner equity. We have inventory for the January 1, January 1st for the cash. So the total will be 15,000. So at the credit side, we don't have any credit side for the owner equity. So we put the balance carry down to the 15,000, which is we get from the total amount at the debit side. And then the account payable account is we have inventory for the debit side and office equipment. So the 8,000 plus 2,500, we get 10,500. So at the credit side, we have inventory 4,000, just only 4,000. So we need to take also the amount of debit minus with 4,000, we get the balance carried down is 6,500. So the account debit and credit sides is balanced. So same goes to account receivable. And then this is for sale revenue account. We have account receivable, cost of goods sold at the debit side. So the total is 10,000 and the carry down will be 10,000. And then cost of goods sold account, we have inventory, sale revenue at the debit side. So the total will be 5,700. And then moving on to the rent expenses account, we have a cash where the company need to um, pay the rent. So the debit is 1,200. So at the credit side also, as a balance carried down is 1,200. Office equipment also same. We just have a debit side 2,500, which is account payable. At the credit side, we put the ending of the month January 28 as a balance carried down, which is 2,500 also. Moving on to the advertising expenses account, we have a cash at the debit, which is 500, and balance carried down at the credit side is 500 also. And then for the office supplies account, we have a cash at the credit side, but we don't have any input at the debit. So we put as a balance brought down where we get 500 from the credit side to make the amount is same and balanced. So I think that's all from my part. I will pass to the next presenter. Thank you.
Assalamualaikum, madam. My name is Nofizati Dalila binti Osman, and now I will explain to you about accounting assignment for part 2 and part 6. Okay, firstly is the part 2. So in part 2, there is adjustment in the account as it stated in the questions. So let's go for the question first. So in this part 2, we need to identify which is accrual, prepayment, depreciation, and allowance for doubtful debts. So the first one, it says that 600 million in wages remain unpaid for January. So the word unpaid is mean that the wages is accurate wages. So we need to add adjustment journal. In adjustment journal, accurate wages 600. And then the next one, 1,200 paid on January 10 includes February rent 600. So it mentions here it already paid on January 10 1,200 for rent, but it also pay for another 600 in February. So this is called as prepaid rent 600. Next one is depreciate the laptop purchase on January 12 at a rate of 20% per annum. So how to calculate the depreciate? So by the price of the laptop, which is 2,500, we multiply with 20% and divide by 12 months, and we've got this answer, which is 41 ringgit 75 cents. And the last one is set up an allowance of 5% on the account receivable balance. So in account receivable, we've got 2,000 multiplied with 5%, and the answer is 100. So all these adjustments will be added or into an adjustment journal, just like in this table. So we can see that the wages expenses, debit 600, payable 600. For the next adjustment, rent, debit and credit 600. Same go for depreciate, laptop, and allowance. Okay, that is for the question number 3, which is record adjustment in the journal. So the next one is in the ledger. This is the ledger for the adjustment account. Wages, accurate wages in debit and credit, both sides 600. So this is we call zero balance, where both already balanced. There's no other balance that need to multiply or minus to get this amount. And then next one is a rent account. This is rent expense and prepaid rent. And then same goes for laptop account, depreciate expense and depreciation with the new amount we just calculate. Next one is allowance with also the new amounts we just calculate. Okay, that is for question number 4, ledger account. Only need to do the adjustment ledger account.
Assalamualaikum and hi, my name is Nafani Sanim and I will present the question number 3, trial balance. So the first one, we can see cash. We put in the debit because as you can see in the part 1, the ledger account, you can see the cash balance brought down, which is 6,800. So that's why we put cash in trial balance 6,800. Then the next one is inventory, 12,300. We also get that inventory from the ledger account from the question part 1. Then the third is the account receivable. Account receivable we put there for the debit part and 2,000. How do we get 2,000? We can see in the ledger in the part 1. In the ledger account we put there, as you can see it, 2,000. So that's why we put it 2,000. Then we move on to prepaid rent. Prepaid rent we put it 600. How do we get 600? Because of the part 2 question. So for the part 2 question, as you can see here, is the 600. So that's why we put it 600 on the trial balance. And the office supplier we put it on the debit side because it is our asset. Then it's 500 total. How we get that total? You can see in the part 1 here I show you. Then the next one is office equipment laptop. Office equipment laptop also we put it under debit. The total is 2,500. Also we got it from the part 1 ledger account. Then the next one is depreciation. Depreciation we got it from the part 2 question. So here I show you. Then the next one is account payable. Account payable we got it from the part 1 question from ledger account. So the amount is 6,500. Then accrued wages also we got it from the part 2 accrued wages. We put it on the credit because the money that they have brought out from the company. So that's why it's on the credit side. Then the next one is allowance doubtful debts, also on the credit side, 100. How do we get 100? So here I show you on the ledger account. Then the next one is owner equity, 15,000. We also got it in the ledger account from the part 1 question. Then sales revenue also 10,000. We got it from the ledger account from the part 1. Then for the cost of goods, we put it on the debit side, 5,700. We got it from the ledger account. Here I show you. Then the next one is rent expense. Rent expense we got it from the ledger account from the part 1. Also you can find it in the part 2. Then for the advertising expense, we got it from the part 1. Here I show you. So here are the advertising expense. So we got it the total 500 from there. Then depreciation expense, we got it from the part 2 here after we calculate. Then 41.67. Then the last one is the bad debt expense. Also we got it from the part 2 question. So here I show you. So we got that 100. So the total of the debit and also the credit, it's balanced. So the total is 32,241 ringgit 67 cents. So yeah, you can see our trial balance is balanced.
My name is Haziq Rizwan, and today I'll be explaining about the statement of profit or loss. So basically the sales revenue that we got is around 10,000, and since we do not get a sales return, which is 0, therefore the answer is 10,000. And since our opening inventory is around 10,000, our purchases is 8,000, and we do not have any return outwards or drawings, therefore the answer is the net purchases is around 8,000. And as for the cost of goods available for sale, which is 18,000, and our closing inventory, which is 12,300, the closing inventory is the part where we're going to use in the next accounting period. So basically it's the cost of goods sales minus with the closing inventory, and therefore we will get the answer of our cost of sales, which is 5,700. And by minusing 10,000 and 5,700, we will get 4,300. And for the expenses part, so using the expenses gotten by question 3 or question 2 if I'm not mistaken, our adjustments, so our rent expense is 600, wage expense is 600, advertising expense is 500, depreciation expense is 41.67, and our bad debt expense is 100. That means our total expense is around 1,841.67. And by minusing our gross profit of 4,300 and our total expense of 1,841.67, therefore our net profit is 2,458.33. As for the statement of financial position, so our non-current assets, which is our office equipment laptop, so the amount given is 2,500, and for the depreciation, which was given in question 3, around 41.67, so we minus that and we get our value of 2,458.33. And as for the current assets, so our closing inventory is 12,300, our cash is 6,800, account receivable 2,000, and since prepaid rent is a current assets, because it's payment for future use, so therefore it's in current assets, so it's around 600. And as for office supplies, it's because it's not yet used at the end of an accounting period, so it's also included in current assets, so that's around 500. And the total of 22,200 plus with the non-current assets, we'll get 24,658.33. As for the finance by part, our owner's equity, our capital is around 15,000, and our net profit, which was done in the previous statement profit or loss, is 2,458, and with that we plus both of them and we'll get 17,458.33. As for the current liabilities, we do not have any non-current liabilities, because non-current liabilities is usually things with an interest or more than 1 year. And as for current liabilities, it's usually paid by next month. So our account payable is 6,500, wages payable is 600, and our allowance for doubtful debt is around 100, and the total of all these three is around 7,200, and totaling that with our net profit of 17,458.33, we will get the answer of 24,658.33. Thank you.
Assalamualaikum and hi madam, my name is Nona Bilabi binti Muhammad Ali, and I will explain about the bank reconciliation for accounting assignment 2. So here the question of the bank reconciliation. So QPS Trending received a bank statement showing an ending balance of 6,800 ringgit as of January 31, 2023. After comparing it with the company's cash records, you find the following differences. So here there is a RM 1,000 deposit made on January 31 was not reflected in the bank statement. So second one is check of 500 is issued on January 30 was not cleared by the bank, and also 50 ringgit was deducted as a bank service charge but not yet recorded recorded in the company's book. So another one, last one question is a customer check of 300 ringgit deposited on January 28 was returned due to insufficient funds. Madam can see it at my left. Here the calculation for this bank reconciliation. For the title QPS trending bank reconciliation statement as of January 31, 2023. So here the columns, there's 3 columns. The first column is particulars, the second one is individual amount, and the third one is total amount. So cash balance as per bank statement January 31, 2023, 6,800, and added means plus with the deposit not yet reflected in the bank statement, so it's gonna be at 1,000. So both need to calculate, I mean my plus, so the total will be 7,800. So minus with check issue what's not cleared by the bank 5,000, and then the adjusted bank balance will be 7,300 ringgit. So balance as per cash book before adjustment will be 7,650 ringgit, and then bank service charge and NSF bank service charge 50,000, NSF check 300 ringgit will be minus, and then the balance as per cash book before adjustment minus with the 350 ringgit. So the adjusted cash balance will be 7,300. So the conciliation statement will be cancelled because the both amount for adjusted bank balance same with the adjusted cash balance. So here for the second question is journal entry. So the date January 31, the particulars is bank service charge expenses will be in the debit side 50 ringgit, and the bank account will be the credit side 50 ringgit also. So another one, journal entry is date January 31, same goes to the bank service charge, but here account receivable customer will be on the debit side 300 RM 300, and the bank account will be on credit side 300 ringgit. So that's all from me, madam. Thank you.
So we move on to the next part, which is part 6. Part 6 is inventory. For question 10, it says calculate cost of goods sold using FIFO. FIFO means that first come and first out. So as it stated in the question, in January 1, got 15 units at 100 ringgit each, while January 10, 30 units at 110 each, and January 20, 20 units at 120 each. So the company sold 70 units during the month. Use the FIFO method to determine cost of goods sold. So it's already mentioned here that the first unit is 17 units. So we calculate first the prices for each date for each unit in the January 1. We just multiply the unit with the price of each unit. So we got this answer for each date. January 1, we got 5,000. January 10, we've got 3,300. While January 20, we've got 2,400. So as total inventory purchase, we just add all the unit, 50 unit at 30 unit, and 20 unit, all this unit, and we got 100 unit. While for total cost of inventory, we add all the prices that we calculate just now, and the answer is 10,700. So using FIFO method, as I mentioned, FIFO is first in, first out. So the company already sold 70 units, so that is the first in. So we calculate that one first. So first 50 units, since the 1st January, we only got 50 units. The total unit the company sold is 70. So we add this date account first 50 unit cost, we calculate the cost, and then next 20 unit. Next date is on 30 unit, but since there are only 17 units, so we minus 70 minus 50, so we only need another 20 unit. So when 20 unit, we multiply with the price, we got this new answer. So that how we calculate total cost of goods sold. We just add this amounts, 5,000 plus 2,200 equal to 7,200. That is the answer for question 10 in part 6. That's all for me. Thank you, madam.
I'm the last presenter, and my name is Nurfahanis Hanim. So for the part C, I will explain the 11th question, which is ending inventory. So after selling 70 units, there are 30 units remaining in inventory. This comes from the later purchases. So the remaining 10 units from January, 10 units, so we times with 110, which is the cost. So the total is 1,100. Then for the all 20 units from January, 20 purchases, 20 we times with 120, which is the cost. So the total is 2,400. So how do we get the total ending inventory value? We plus the 1,100 and also with 2,400, so the total is 3,500. So that's how we got it, the total ending inventory value. So that's all from us. Thank you.